Hey guys, how you doing? Austin Hilton here. In this video, we're going to be talking about Churchill Capital. This is a company that I am long-term bullish on, that I do own stock in, and I just want to, point out that it's been a little bit of a rough time as of late for this stock, and I think we've got, we definitely got some selling pressure that's been pushing the stock lower, and I'm looking at this stock still long-term. I'm still bullish on this stock long-term, and I still think this stock can do a lot long-term. We are testing new 100-day moving average levels. Don't want to, in that scenario, so the stock has been trending down, and I want to see it definitely moving in the other direction. Being a stockholder, it is tough to watch on some days, but I will cut to the chase and I will tell you that I believe in Churchill. I believe in the overall EV marketplace. I did a video the other day. It was a Tesla video. I own Tesla as well. It was a Tesla video talking about how big the opportunity is for EV in the United States. So in that video, I talked about a very simple metric, is the fact that out of every 100 cars sold, 2 of them are EV as of right now. By 2025, 10 out of that 100 will be EV cars. So that's a massive jump, but it also paints another picture, is that there will still be 80 to 90 plus additional room to move as we move forward and beyond 2025. And I think fundamentally, with what the company is going to be doing with their car, going after ultra luxury market, I like that approach. And we still have yet to see how the car, the company has to deliver on the car. The car has to be everything they touted it to be. But I think that they're headed in the right direction. So I've got 2 pieces of information for you today related to this stock. We're going to quickly take a look at this chart. But I am a believer in Churchill, and I think that this stock is going to continue to maybe have a little short-term pressure and selling around it. But I think long-term, I still think this is a great stock to be in, and I'm in it for the long term. And so with that said, I want to point out that this video is for entertainment purposes only, and if you get value out of this video, please do 2 things. Consider subscribing to the channel, as well as drop a like on this video. It helps the video, helps the channel out. So let's go take a look at what's going on with Churchill. So you can see from this chart, this is a 1-month chart. The stock in the past month has dropped 35%. And we are now testing some new lows, right? And so it's just a scenario where you can see in an overall 6-month, from this particular scenario, we've dropped, that is your 1 month, that's your 35%. And in the last, from April 6th to just April 15th, dropped about 17%. My hope is that we will start to get some turnaround, but at this level, we're absolutely looking at getting close to testing that 100-day moving average line, which brings me to this piece of information. This is really talking about basically what the stock is potentially going to start maybe trading for on Friday. So traded today down on Thursday about 7%. I made this video Thursday evening, so just FYI. So shares are cracking below the 100-day moving average on the dip. That's not a good indicator. Again, short term, I firmly believe that we will get back. But Cciv is testing down into a key support area near $20.50. This is why I wanted you to bring this to you. So the fear here is that with a series of lower highs squeezing the stock lower, that this support level will fail. That is concern. I am a stockholder. I am not selling. I am staying with the stock. But as a Cciv stockholder, you need to be aware of these things, both positive and negative, and that's why I'm bringing you this information. Okay, so if that is the case, we will have to have sub 20 on our radar, as well as the idea that 2050 may become resistance to move back. On the upside, however, Cciv will if it can reclaim its 100-day moving average, that puts a quick potential trade up to its 21-day and 10-week moving averages in play in the 24 to 24.50 range. Above that could open the door back up to 30. What is the time frame here? The time frame hopefully is short term. That would be if I wish I had a crystal ball to look at that. But I wanted you to be aware of this information, is that with a series of lower highs squeezing the stock lower, that support level, we may fail at that, and I don't want that to happen. Again, I'm a shareholder, but again, I want you to be aware of that. My advice is do what's right for you. I'm not selling. I'm staying in this the long term. I'm absolutely in this, as well as I own Tesla. I'm in that for the long term. I own Xpeng. I own Neo, and I own Lee. I'm in all of the major EV plays, and so this one is one that I'm not happy with a 30% down cycle, 35% in the last month, but it is what it is right now, and I'm willing to ride this stock to continue to in the belief that it's going to go up. Long term. Okay, so the last piece of information I have for you kind of really talks about the car itself and basically delivering on what the car will do. Obviously, okay. So at this point, it's important to remember that this was basically so I apologize. I started off too quickly. Excuse me. CCIV stock isn't cheap if Lucid can deliver and might be cheap enough at these levels. So if you're considering getting in scenario is, look, at these levels, it could be a buying opportunity to potentially pick up more stock. I am potentially thinking about it. I'm telling you that at these levels, we could be looking at maybe some additional buying opportunity to maybe pick up some more, to take more of a bullish stance long term and pick up some levels. Remember, we might break through this 100-day moving average on the dip. That might be coming. If that does come, looking at this long term, I might pick up some additional stock. Okay, because here's the thing: at those levels, it could be a really nice, obviously very, very, very nice return long term in this scenario. So in February, the stock hit 65. Now it's trading below 22. So at this point, look, let's remember that the plunge isn't necessarily a reflection on Churchill or on Lucid. Okay, it's that the stock simply ran too far up. Okay, so when the SPAC scenario was going down, many investors didn't really understand how SPACs worked or simply didn't care. CCIV stock kept gaining even before the details of the merger were announced. When they were, the market realized that a $60 plus price for CCIV meant a $100 billion valuation for Lucid. The stock fell. Okay? Now, that's all in the past, right? What matters for CCIV stock is what Lucid does in the future. That's why I'm bringing you this piece of information, okay? Because as a CCIV stock, I thought this was relevant to the overall landscape of where this stock is right now and where it can and should and, frankly, hopefully will go, okay? So with 1.6 billion shares outstanding post-merger, the CCIV stock price values Lucid at around 35 billion. That's a big number for a company that hasn't yet delivered a vehicle, okay? But it's also a number that could, in retrospect, look cheap if Lucid can deliver on its potential and its promises. That's a big if, certainly, but Lucid has a massive opportunity. Remember, Lucid is going after the ultra luxury market. They really are not going after the bulk of the market that Tesla has gone after. Again, I'm a fan of Tesla. I own Tesla stock, but they're different. The simplistic case for CCIV stock is that Lucid is the next Tesla. I don't really believe that. I don't really know or think that CCIV is the next Tesla, okay? There is some truth to that, but the CEO has said that he plans to mimic Tesla's strategy, and that's basically kind of his go-to-market strategy, okay? And we'll talk about that here in a minute. Lucid is starting on the high end with his Lucid Air Dream Edition, which will have a price of $169,000. Tesla did the same with its Roadster. Lucid is bypassing dealers and using a direct sales model just like Tesla. It's developed a vertically integrated model with technology it developed on its own, unlike most car manufacturers that rely heavily on outsourcing. Okay? All right. So, second, since the merger was announced, Lucid has tried to differentiate itself from the current EV leader. At a presentation in March 31st, the CEO compared Lucid not to Tesla, but to Daimler AG. That's basically Mercedes-Benz ultra high-end division. Earlier in the month, he said that Tesla was a high-tech premium product. but not true luxury. This was the CEO talking about Tesla. That's the CEO said that. Said it was a high-tech premium product, but not true luxury. So that's how Lucid is looking to differentiate themselves, is that they're going to be this high, true luxury. To hear the CEO tell it, Lucid might well top Tesla. It's not to say that the CEO is criticizing the incumbent. In the presentation, he noted that Tesla was 5 to 6 years ahead of the competition in terms of efficiency. But Lucid believes it can pass Tesla in measuring efficiency via miles per kilowatt hour. In this model, kilowatt hour essentially is the EV version of miles per gallon. Lucid Air should see 4.5 against 4 for the Model S and under 3 for models from Jaguar, Porsche, and Rivian. Okay, so let's wrap up with a few final thoughts. So here's the deal. Being a CCIV shareholder right now is hard. It is a scenario where the stock's on a down cycle, and we've been here before. I apologize, my face always itches when I'm on video. As a 30-plus year investor, I've been here before many times. I am not selling. I am not getting out. I believe in where these guys are going. It will take execution. We have to see that the company executes. They deliver on, a ultra true luxury experience. And I don't think that Lucid is the same as Tesla. I agree with the CEO in that case. I think that Tesla, it makes an amazing product. It is a premium product, but Lucid is going after the ultra high-end luxury market. And so at a current valuation of $35 billion, that is steep. But at these levels, this might be one of the best opportunities you've ever seen to buy. But it is a gamble at these levels from the standpoint of what do you believe this company is going to do long term, and we have yet to see anything. That's just the truth, right? That is it. That is what it is right now. And so you kind of have to make a decision on what you want to see or do with this stock. Me, I'm staying in it. I'm in it for the long term. I think the stock is a 40, 50 or more stock in a year, if not higher. I didn't look recently what the analysts think about it. Frankly, I don't care what the analysts think about it. I'm looking at this long term, and I think that it's going to do well. And when we finally get a car on the street, that'll be a major catalyst, and we will see how everything plays out. But until then, we are in this kind of wait and see model, and the stock gets beat up and moved around, and because there's really nothing going on except waiting on really news from on when this car goes live and all that kind of stuff. So that's really where we're at. It's a long-term play, for Churchill. It really is. And so hopefully you got value out of this video. I'm here with you every day in this stock, watching it. It's hard times right now, and but my belief is that it's going to get better, and this is going to be a good one long term. So I hope you enjoyed the video. As always, I'll see you in the next one. Take care. Bye.